Let's bring in now to talk about the chip space more broadly, top chip analyst, Bernstein, Stacy Rasgon. Welcome back. It's nice to see you. So
Good to be back.
I know it's too soon for you to talk about this company specifically, but at least it raises the issue of companies that are out there that want a piece of this AI pie. How should we be thinking about these newcomers relative to the heavyweights like Nvidia?
Yeah. So there's a number of areas of competition for Nvidia, which makes sense. It's an enormous potential opportunity, and all the dollars right now are flowing to Nvidia. And you've got other merchant suppliers like AMD or even Intel. You have hyperscalers doing their own products, and then you have startups as well, right? And I think for a lot of the startups, it's difficult. They don't have scale. They don't have ecosystem, and if their pitch is, we have a chip that's better than Nvidia, I think that's hard because, with every generation, Nvidia has a chip that's better than Nvidia, and they have the software and all the ecosystem support that goes with it. So I'm not going to comment on Cerebras, but they're doing some other things. I mean, clearly, they're gonna try their best at this point. But in general, so far it's been a winner take all. And I always, as I've said this before, it seems like it's Nvidia's game to lose, like more broadly.
Well, I mean, it's winner take most, right? I mean, it's not like Broadcom hasn't done well.
No.
The issue, though, is that, as it's done better, its multiple's gone up, hasn't it? So it's not as cheap as it was viewed to be before.
That's true. And so to be honest, if you're talking about like the real competition, I actually think it is more on that hyperscaler side, the cloud vendors doing their own chips. And this is an area clearly where Broadcom really shines. They're doing a lot of the ASIC work for the key players like Google and Meta and some others. It's a very big business for Broadcom. They said $12 billion in total AI revenues this year. I bet $8 billion of that 12 is probably custom AI accelerators and ASICs for those large guys. And look, I actually do think that is real, and it will get bigger. And I wouldn't be surprised if the penetration of ASICs relative to the broader TAM gets bigger and bigger over time. It's kind of apples and oranges in some sense. It's more, those stuff is more used for the internal workloads of the hyperscalers versus workloads where you need programmability or anything that's customer facing or enterprise. So they are kind of two different markets. But yeah, I mean, this is a market that's already sizable and it's getting bigger. But to be fair, I think the overall opportunity, the TAM is big enough for both of them to benefit. I don't think it's a matter of one necessarily winning over the other. The market's sizable enough where I think both of them can win. And I like Nvidia and I like Broadcom. We like both stocks.
I mean, but that kind of squeezes out AMD, doesn't it?
Well, I mean, this is one of AMD's like broader issues. I mean, in the near term, and by the way, they have an AI event coming up in a week or two, and we'll get some new product announcements, and we'll see. And they suggested they'll do $4.5 billion or more than $4.5 billion this year. I think expectations are probably for 5+, and I don't want to knock them too badly, because it was zero a year ago. I've said this before. So on an absolute basis, ramping up, $5 billion of a product from zero in a year is nothing to sneeze at. In the grand scheme of the dollars that are getting spent, though, it's not very big. Nvidia will do well over $100 billion in revenue this year. Again, Broadcom's going to do double digits in total AI revenues. So it's not that big, but it's good. But long term, I mean, you bring up a good point. Like, I understand the need for a second source, but most of AMD's exposure right now is at these larger hyperscalers. And is that second source? Does it need to be the AMD or is it Broadcom? I think that's an open question at this point. Yeah.
Two quick ones before I let you run. What's the outcome, the end game, whatever you want to call it, for Intel? What happens here?
Yeah, I mean, that's a great question. I mean, they've kind of bet the company now that their 18A, their next generation process that they call 18A, they're betting the company on its success, and so that's I guess what we're waiting for. And if it is truly successful, maybe you could see a revitalization. They bring a bunch of, they're outsourcing a lot of stuff to TSMC right now. It's killing their margins. You bring the stuff back in, the margins get better. Ideally, it's a better process so they can take back market share and they can charge more because they're better products, and it gives customers a lot of confidence to put a lot of foundry volume there. And that's how you kind of build to the targets that they put out there for 2030. And keep in mind, it's only 2024 right now. There is a lot of wood to chop, though, between now and then. And if that process does not knock it out of the park, if it's not successful, then, there are some more severe scenarios that may come to play. And to be clear, I don't think they're desperate at this point. We've made this point before. I think given the OPEX cuts and the CAPEX cuts and the dividend suspension and the government funds and the private equity funds that they've gotten, I think their cash position is okay. So I don't think they're desperate. They don't need to make any crazy moves, but they probably got a year, 18 months, like to see if 18A really holds muster or not. And if not, then there are more severe scenarios that may come to mind.